Welcome back. Well, Rishabh Instruments, that's in focus on the back of its fourth quarter numbers. Revenues came in at the lower end of its the FY24 guidance. Now, for FY25, we are bracing to see what exactly can they deliver. Mr. Dinesh, the group CEO, joins us on the show. Hi, sir. Good morning and good to see you, Ben. Well, give us a few details then. If you could tell us for FY25, what kind of revenue growth as well as margins can you guide? On the revenue growth, if you could give us a range.
Okay. Very good morning, Nigel, and nice to catch up with you again after the last quarter results. And if you look at our annualized results on the top line, we have delivered what we promised, about 20% top line growth, and the consolidated level for the whole group, we have delivered 21% growth. And on the bottom line, when it comes to EBITDA, we had one unit and particularly one sector was having problems, and that's why the margins were stressed. If you look at overall our business, so about close to 40% is aluminum die casting, about 61-62% is electronics business, where we have delivered EBITDA of 20 in excess of 20%. So 21-22% is our EBITDA for that segment. And on the aluminum die casting, we dropped from 15% to about 4%. That's from where we have got all of that.
Dinesh,
die casting.
Yeah. Dinesh, so we have some of those numbers, and they're coming up for our viewers on the screen as well, as you tell us. But that's about the past year. As you said, the aluminum die casting business, there were problems, there were some pockets of weakness as well out there.
Yeah.
Now, going ahead from here on this sort of a base, what kind of a revenue growth can you do? And if things improve, then what kind of a margin improvement can we brace ourselves for as well?
Absolutely. I was coming to that. So going forward in this year, the top line growth for our electronics will remain in excess of 20%. Aluminum die casting, we are scaling it down from 20% to 10% so that we can focus more on profitability. So overall, I would say about 18 to 20% is close to that range is the top line revenue growth which we can expect this year, because we are riding on infrastructure which is coming up in India. India business is doing really good for electronics business. In Europe also have done extremely good last year, and that will continue to happen for electronics business. When it comes to die casting, we want to scale down some of those projects which are not so profitable for us because of old contracts that we have had, and we are negotiating these contracts with the customers, and we may let go some of the contracts which are not profitable. So the process is all that we need is a little bit of a time, and we will be getting back to overall consolidated EBITDA level of about 15%. 15 to 18% in the coming financial year. That's the guideline in which we are going ahead.
So 18 to 20% revenue growth with around 15 to 18% margins is what you are guiding for the entire year, right?
Absolutely.
All right. Let's talk about the future outlook for Lumil Alucast, because you said your die casting business, which had been under pressure, especially from the automotive industry, you were looking at price renegotiations, and you're looking to also, let go of some of the non-profitable contracts. What proportion of your portfolio are you looking at in terms of price renegotiations? If that does not happen, what's the kind of business that you're willing to let go of?
Yeah, see, our portfolio is about 45% of aluminum die casting is automotive, which we want to bring it down to about 25-30%. That's where we are going. And so out of overall business, we are talking about 20% or 40%. So it's about 12% is what we are letting go out. But that will be very well compensated by the growth that we are finding in electronics business. And we are focusing more on EMS business as well as solar. And so we have got, we added these two revenue streams in the last couple of years, which are going to get us much bigger growth perspective. So we'll be able to juggle around with all the different revenue streams that we have had. So on the top line, we are not really worried about. So all that we need to do is some action plan to get our profits up in aluminum casting, particularly automotive sector.
I remember you said that you are looking at closing 100 crore acquisition pretty soon as well. The target is in India and the deal will close in FY24. Obviously, that did not happen in FY24. So FY25, something that we can hear is, are the talks still on?
See, what we did carry out our due diligence, and we have got CPs which we have identified, and we have asked the potential seller to go through them and complete those. It may take about 6 months. After that, we will relook at the whole situation again, and we may make a decision at that point of time based on the level of CPs completed as well as the financials then.
Right. And
So it's not off the table, but it's not confirmed yet.
And when you guide for 15 to 18% margins, I was just trying to figure out one thing because, gas prices peaked out at around 10% of sales. From there, we've seen a big reduction in gas prices. That is typically around 3% of your sales in good times. Where does it stand at right now? How much of a margin lever can lower gas prices be for you?
Yeah, gas prices have stabilized and going down. That's absolutely right. But at the same time, what has happened is electricity prices have gone up substantially in Europe, and also the big problem has been the inflation and high wage revisions which were forced by the government. So we had 2 wage revisions last year amounting to more than 20% of minimum wage increase. So that's been a bit of an issue. So it's generally the inflation and energy cost and labor which is driving these cost pressures at the moment. But what happens is, we have other electronics business in the same environment where we are able to transfer this to our clients because we have our own brand and we have our own products, and so we are able to drive those very swiftly. And in fact, our Lumel SA electronics business from Poland has been the most profitable of all our big 3 companies that we have. So unfortunately, aluminum die casting is OEM type in nature, so very tight contracts with big automotive giants, and so it becomes really difficult and takes longer time and much higher efforts to renegotiate and change things in aluminum die casting, particularly with automotive. So we are working on that. It may take about 2 to 3 more quarters. So how I can see is this year FY25. We still will continue to have prices on, pressure of margins on aluminum die casting. Otherwise, everything should be okay. And next year we will come back with the same guidelines which we are having in the previous years.
We'll hold you at these numbers, Dinesh. Appreciate you joining in. Wishing you all the best. Look forward to chatting up with you as the year progresses as well.